Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And this is a special edition technical analysis commentary for today, the 25th of May, on the E-mini S&P futures. This commentary is a follow-on to my earlier video commentaries made on the 7th of March this year, and a supplementary one to more recent videos made on the 4th, 6th and especially the 13th of April. So why am I yet again making another supplementary video? Well, something has happened this past week, really these past 2 weeks, that deserve comment and attention, especially for the future. So let's look at the daily chart. So as I said in my earlier videos, we had a mid-February to early April bearish halfway hesitation, which reached its downside target in the 5200 zone, followed by an easy follow-through lower down through the 50% Fibonacci line for the October 23 to February 25 move at 51.45 in early April. Prices exceeded on the downside even this follow-on lower, but then we saw a number of factors and features halting the decline and the reversion of the market back up. These were, and they are in no particular order: Feature 1, a 2-day bullish meeting lines pattern in early April, immediately countered, but then Feature 2, a combined key reversal up and bullish engulfing pattern, pushed prices back up, and this ended up as being part of Feature 3, a 3-day horn bottom. Now the recovery was also prompted by the significant Feature 4, the strong support of the 50% Fibonacci line of the October 22 to February 25 move at 48.34, and by Feature 5, the bright green March 23 to date uptrend, which we currently see at 48.96. These two, so that's the 50% Fibonacci line and the bright green uptrend, stopped the market decline dead, stopped dead. And as I said back in my 13th of April commentary, one should not, and I quote, one should not underestimate them, end of quote. Additionally, we also have Feature 6, the purple October 22 to date uptrend, currently at 49.05. Now, this has been realigned to the new low in April, but in its earlier incarnation, whilst it was breached on the downside, we did not see a single close below it, not a single one. So this uptrend was still active back then on a closing basis only. But now, as I have stated, this time it has been realigned. Now the initial recovery back up was halted, unsurprisingly, by Feature 7, the 50% Fibonacci line of the whole of the 2025 move at 55.01. I said back on the 13th of April, and I quote, "This 50% Fibonacci line I would suggest would be where to look in the immediate start of this coming Easter week," end of quote. And so it proved to be, with prices finally pushing over and stabilizing higher in the last week of April. All this action allowed me last time to draw another feature, Feature 8, a bright pink October 23 to February 25 bullish Andrews pitchfork, and the nearby pink middle time, currently at 56.99, has played a key role in recent days, as I will shortly discuss. To do this, I'd like to reprise part of my commentary from the 13th of April once more, and I quote, "I'll give, in the spirit of my earlier features on the downside, 3 features to watch out for on the top side in case we do see a further significant reversion higher. By the way, this is in no way guaranteed, but just in case. The first is the gold long moving average, that's currently at 58.47. This is flatlining and will shortly start to decline, so it is a dynamic level that deserves watching. Secondly is the whole late March, early April area between 55.09 to 58.37, specifically towards the 58.37 level. The third is the most obvious one, the all-time high at 61.66. This is an obvious one, but it still needs to be said," end of quote. So let's look at these and add some new features. Okay, so the gold long moving average is key. It is really key, and prices pushed up through this resistance 2 weeks ago and started to stabilise over it, as well as the flatlining mauve medium moving average, currently at 58.42, which is so close to it. In part, this was done after prices punched up through the combination of the previously mentioned pink middle time and the green flatlining short medium moving average, currently at 56.70. Pushing up through these set off a gapping change move higher, which is still open between 57.15 to 57.34. It was also aided in its move strategically higher by the bright red early April to mid-May uptrend, as this implies this uptrend is no longer valid, and I show it on my daily chart for illustration, and the breaking of this uptrend is part of the reason for this market commentary video update in the first place. Additionally, two other features have occurred that have given reason for this update. The first new feature is the market moving down and closing below that gold long moving average. The least this indicates is that the market has not stabilized over the gold long moving average and that there is a renewed threat to the downside. The second feature is more specific, if you will. It is last Friday's pattern, or should I say patterns. They are a bearish engulfing pattern plus a bearish opening black Mariposa, and most important, a possible bearish belt hold pattern, all on the same session last Friday. The reason I single this possible bearish belt hold pattern is that belt hold patterns are one of the most powerful directional patterns in existence. This pattern acts both traditionally and also utilizes the data in the same direction. Not only that, the success rate of belt hold patterns is close to 70%, a very high percentage indicator of direction. Additionally, you may see more than one in the course of the market following the direction of the pattern, so watch out for that in the future. Thus, to sum it up, the failure or seeming failure of the market to stabilize over the gold long moving average, the break of the bright red uptrend, and lastly the possible bearish belt hold pattern all prompted me to make this video commentary. So what should we look for on the downside? Well, firstly, I look to the bright pink middle time below again, a dynamic rising support, or at least an attractor. Next, I'd look to the old 38.2% Fibonacci line, the January 24 to February 25 move at 56.07. This had acted in stabilizing prices before on a fall, admittedly from a greater height, but it's still nevertheless there. Finally, I'd look to the key 50% Fibonacci line for the whole of 2025 at 55.01. So if you want to level, 55.01. Any stabilization below this would likely prompt me to make yet another special edition video. Now, to counter all these, I would suggest we would need a concerted attempt to break higher, up and over the previous all-time high, which is actually at 61.66.5. And in this regard, I would like to leave you with one final thought. It is not a pattern as yet, not yet, just a possible idea of a pattern. But if prices were to drop down and then recover, well, it would set up the opportunity for the whole action from mid-February to whatever period in time it was in the future as a possible reverse head and shoulder pattern. With all the possibilities such a pattern, usually seen as bullish, could bring. Thank you for watching and listening. This special edition supplementary broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.